Uday Kotak, former managing director and CEO of Kotak Mahindra Bank. In his tweet, he mentioned an investment of 10,000 rupees with them back in 1985 would be worth around 300 crores as on 2nd September 2023. In 1985, Uday Kotak founded Kotak Mahindra Bank with a loan of 30 lakhs from his friends and family. In 2023, the revenue stood at 67,000 crores with a net profit of 4,000 crores. Meanwhile, in Q2 of financial year 24, HDFC Bank earned net profit of 16,000 crores, followed by SBI Bank, which earned 14,000 crores. But how are they earning so much?
Good question. You are a good question.
You can be one of the reasons. What? How are you making banks rich? Let us find in this video. Hello friends, Namaste. I am Rohini. Welcome to the knowledge series of Fincash.com. How are you connected with the bank? Your savings account, current account, fixed deposit, recurring deposit, credit card, debit card, UPI, gold, insurance, mutual funds, trading, and loans. There are so many ways you're connected with the bank. What do you think the banks do with your money? Do you think they are just keeping it in a locker? Not at all. How are they earning? Imagine the banking network around you. For example, let's take your office. 400 employees having savings account in XYZ bank. Now imagine the number of offices in your premises, in your city, state, and the entire country. An average salary of 10,000 rupees every month. Imagine the amount of corpus getting accumulated.
Damn!
Banks invest it in government securities, mutual fund units, shares, debentures, and bonds, etc. However, as per RBI rules, investments included under held to maturity should not exceed 25% of bank's total investment. How much are they earning? We can simplify these transactions into 6 categories. First category, savings account and current account. In last 5 years, Indian markets delivered 18.8% annualized return. Let's assume that bank should be earning this interest on the investments. Only spend bank have to do is to give you 3.5 to 7.5% annual interest rate on your savings account. And in current account, they don't even have to pay the interest rate. Therefore, every bank prefers commercial banking over personal banking.
Brother, what's that?
Second category, fixed deposit and recurring deposit. Customers earn 4% to 7.5% interest rate on fixed deposit. For recurring deposit, they earn between 4% to 7.3%. This interest rate varies bank to bank and also between individual to senior citizen account. These fixed tenure options increase the liquidity of bank. Bank gets the opportunity to earn more money. Now, if you break your fixed deposit or recurring deposit before its maturity, banks charges you penalty 1% for recurring deposit. For fixed deposit, if you withdraw within 1 year, bank charges you 0.5% and 1% for 1 to 5 years on your withdrawal amount. This is added advantage to the banks. Third category, loans. There are 2 types of loans. One is your commercial loan. Second is loans to individual. Loan given to businesses is commercial loan. It comes with less tenure. The interest rate lies from 9 to 12%. Individual loans are your home loan, gold loan, vehicle loan, student loan, agricultural loan, loan against property, loan against securities. The average interest rate of these loans fall between 7 to 10% depending on the bank. The banks are also happy to increase your tenure. This gives them more chance to earn interest rate. Do remember there are hidden charges. like processing fees and penalty if you miss one EMI. During 2022 to 23, Indian banks have collected an aggregated amount of 5,309 crores, including penalty charges against delay in payment of loans. Fourth category, credit cards and debit cards. Some cards have monthly or annual fees while some do not have, which directly gets deducted from your account. A new wave of personalized debit cards and credit cards is giving additional revenues to banks. Why do you think no cost EMI is the new trend? Even if you miss one EMI, it becomes a huge source of earning for banks. Credit card interest rate falls between 35% to 48% annually. For debit card, it is between 12% to 17%. Next is your forex charges. Whenever you make a purchase in foreign currency, there are hidden charges on transaction. Fifth category, third-party products. If you had bought insurance, mutual funds or trading from banks, you are using their third-party services. They're acting as a broker and earning commission. Shocked, right? The brokerage for selling insurance is between 25% to 30%. On mutual funds, it is on an average 1.5% and above. Similarly, a fixed commission on demat account, government schemes, gold coins, or any other purchases you are doing through a bank. Hence, before buying any third-party services from a bank, we recommend you to do a check on services online so that you can save on your hard-earned money. Sixth category, miscellaneous income, the biggest category which is hidden, which not many people keep a track of. Every transaction you do through IMPS, there's a deduction of 5 rupees. If you are converting an EMI, even if it is no cost EMI, there may be chances of rupees 100 to 500 processing charges. If you use ATM transaction more than 5 times, you will be charged additional 20 rupees per transaction. Other than this, there are loan closure fees, bounce charges, late EMI charges, account opening charges, account maintaining minimum charges, overdue charges, ATM charges, and many more. The amount may look very small, but remember the network of bank we discussed initially. Damn! Most people are not aware of these hidden charges. We want you to be vigilant on every penny you spend because it is your money. Invest smartly. Do not forget to like, comment and subscribe to our channel. Also hit the bell icon for more knowledgeable videos.